Hey everybody, this is Greg Gossett, and today is Saturday, February 19th, 2022, and I appreciate you coming to my weekend edition of Gossett Trading and Mentoring Live. Wow, what another interesting, volatile trading week we had last week. And so today in this podcast, what we're going to do is we're going to do a few things. First of all, we are going to look at my current positions. We're going to talk about when I bought them, why I bought them, and how I am going to manage them going forward. I do have trades on multiple time frames, daily, weekly, monthly, so we will go through each trade. And like I said, we'll take a look why I entered the position, how I'm going to manage it going forward, either to the upside or the downside with my emergency stops, end of day stops, if we reach trailing stop levels, and how I'm going to manage them going forward. So we will go over my current open positions, both daily, weekly, and monthly, and then we are also going to take a look at my my closed positions that I closed during last week. After that, we're going to talk a little bit about trader psychology, the importance of trader psychology. It is the most important skill that you will ever learn in trading. It is very important, of course, to learn about support, resistance levels, stops, entries, exits, profit targets, the technical side, but you need to learn the technical side so that you can create a plan. But after you create the plan, it's up to you if you follow the plan, and that all comes back to trading psychology, whether or not your emotions are getting amplified either to the upside or the downside, if you're in a winning trade or a losing trade, but you really need to stick with it, follow your plan. You know, I was watching a movie last night, great movie, actually, called American Underdog, and what a great movie that was, football movie. And in the movie, they were talking about the importance for a quarterback to stay in the pocket, or in other words, stick with the play that was designed for the quarterback, and to stay in there with all the linebackers running at you and sticking with the play. And while I was watching that, I was thinking about it in terms of trading, and it's important that you have to stay in the pocket of your trading plan as well, with the proverbial linebackers coming at you, but sticking with the play. And that really does come down to trader psychology. So we're going to touch on trader psychology. It's very important. If you have issues with following your plans, you need to address it. There are so many different ways to trade. There's not one right way to trade. It's important that you find a methodology that fits your personality, but then stick with it. So we'll talk a little bit about that. Then I always like to read a trading poem from my friend Frank, who posts that on Twitter, and he always posts every day a great trading poem with a lot of wisdom in there, and so we'll cover that as well. After that, we are going to go down through my stock watch list, and we'll just go down through each stock one by one. I'll do a quick little commentary and hopefully be able to point out what I would be looking for next week for some potential trades. As I mentioned before, it's been quite volatile in the market. It's been a difficult swing trading market. It's been a pretty good day trading market with all the volatility, but for the swing trading, it's been tough this year. The last couple years have been easy. And so when we have a proper setup, we never quite know whether or not it's going to work. Of course, actually we don't, but we do have to have a complete trading plan. For me, with emergency stops, end of day stops, I need to know where intraday profit targets are. I need to know where overhead resistance levels are. I need to have trailing stop methodologies. But if you have to know what you're going to do regardless of what the market does, because we don't know what the market is going to do, but we have to know what we're going to do. We have to have if-then statements. If it does this, then I'm going to do that. If it does that, then I'm going to do this. We need to position size based upon volatility. It's very, very important, and I'll cover this a little bit on one of the first trades that I took, and I'll give you an example of that. But we will go down through the watch list. I will go through each one. I'll do a commentary about where it's at, what I'm looking for, and usually it either needs to go up further for me to get interested in taking a position, or down further. And so it comes down to patience, looking for those levels, looking for those intraday rejections or closes under, close over, like the 200 over the 250, 30 RSI, look for crossovers, look for higher low V1s, look for return to value V1s, all the different trading methodologies that I use. And so hopefully after going down through the watch list, we will be able to find some potential setups for next week. They may not be at the levels they need to be, but my goal with this podcast is to point out the levels that I'm looking for. So if next week they happen, that's when I will take action. And so we'll go through the list. I'll mark the ones that look decent or look like there's a good potential that they may trigger. And then at the end, we will go through all the ones that I marked one last time, just to do a little bit of a recap. So anyway, so that's what we're going to do. First of all, I have to run the U.S. legal disclaimer. So hang tight for about 40 seconds. And as soon as that's over, we'll get started. So hang tight. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, well, there we go. Let's get started. First off, on Friday, yesterday, I did buy Advanced Micro Devices AMD. And you can see here from this chart, the reason that I bought it is we had an intraday rejection of the 200-day moving average. That is the black line here. Buyers came in, it came down, it tested the levels under the 200. There were not enough sellers there to keep it down. That's why it moved back up. So this is good, timely information that a major level held, which is the 200-day moving average. Large financial institutions, savvy investors come in at the 200, they come in at the 250, they come at the 30 RSIs. Those are good levels to key off of. And you can see on Friday, we went under the 200 and closed back above. We also created a V1. A V1 contains two bars. Here's bar 1 on Thursday. Friday went below, closed back above. That's a really good sign. Also rejected the -1 ATR channel. Also undercut the low of this low of the range here back on the 11th. And it is a higher low intraday rejection of the 200-day moving average. You can see here we went under the 200, over the 200, and it moved up nicely. That was a nice tradable rally in AMD. But now we went under and back over, but you see this low here is higher than this low here. And I always like higher low entries better than lower lows. Lower lows tend to bounce and then fail, kind of like this did, but higher low V1s, higher low closes back above the 200-day moving average, even 30 RSIs tend to be able to have a nice longer leg up. So, I picked my levels, I have my signals. Doesn't mean this is going to be a profitable trade. Like I mentioned, this is a very difficult market to trade to do swing trading with, but you have to take the signals when you have them. So you can see this purple line down here. This is my emergency stop. So whenever I enter a trade, I have two stops. And what I'm going to do is I'm going to give you an example. I won't do this on all of them, but I mentioned about position sizing based upon volatility. And what I use for that is the value of the 2 ATR. So ATR means average true range. A 1 ATR would be what is the expected average true range over the last 20 days. And that's just the, based upon the current volatility, what the expected move is? Well, I don't want to put my emergency stop within one ATR because it is within noise. I want to put it way outside of that. So I take the ATR, actually the ATR, one ATR is 774. So what that means is that AMD in the last 20 days has averaged, its average move every day is about 7.74 points. Well, I want to go outside of noise, so 2 times that equals 1548. So with my emergency stop, I always have my emergency stop 2 ATRs below my entry price. And then I also use the 2 ATR to position size, and because I position size based upon the volatility. If the volatility is higher, this number is going to be larger, and therefore my position size is going to be smaller. If the volatility is lower, this number is going to be lower, and therefore my position size is going to be higher. So it's very important to position size based upon the market's current volatility. So how do we do that? So I'll give you an example here on AMD. So first of all, a good rule of thumb is that your maximum allowed loss, which is what you're working with here when you have a 2 ATR for your position size, is that you need to know what your maximum allowed loss is on any one trade. So, and that's usually a percentage of your total capital. So if your total capital is $100,000, for example, a good rule of thumb, 1% of your total capital, and so $100,000, 1% of that would be $1,000. That's the maximum I'm going to lose on any one trade, no matter what. In most cases, sometimes you could gap lower than that, so it could be lower, but so 1% of your total capital, $100,000, 1% is $1,000 in this example. I'm not saying use $1,000. It has to be based upon your the capital that you use. I don't even use 1%. I use about 0.5% because I'm a little more conservative with that. But let's just go with $100,000 account. 1% of that's $1,000. So on any one trade, I would take $1,000. I would divide it by the value of the 2 ATR. The 2 ATR in this case is 1548. So divided by 1548, it's going to tell me to buy 64.59 shares. So I'll just round up to 65 shares. So in this example, I will use 65 shares. Now, if you had $50,000, 1% of that is $500. 500 divided by 1548 is 32.29. So in this case, I would use 32 shares. Now, that's for your emergency stop. So essentially, in this example where I had $50,000, 1% of that's 500 divided by the value of 2 ATR, 1548, tells me to buy 32 shares. If the price ever got down to my emergency stop, I would get out immediately, and therefore I would, if it got there based upon that position size, I would lose $500. But 95% of the time, the way that I trade here, I'm not going to lose the $500. That's the worst case maximum case scenario in what I'm going to lose. But that based upon my emergency stop. But I also have an end of day stop because I'm an end of day trader. So my emergency or my end of day stop here is a close below the 200-day moving average. So I have my maximum allowed stop down here, but I have my end of day stop, which is much, much closer here at the 200-day moving average. So on this particular trade, if it were to go down to my maximum allowed loss, I would lose, in the example that we had, $1,000, right? But if this trade on Monday closes anywhere below the 200-day moving average, I'm just going to get out. And 95% of the time, your end of day stop is going to be the amount that you're going to lose, not your emergency stop. But you have to have an emergency stop down here just in case. So one more time, emergency stop down here, 2 ATRs below. End of day stop, close below the 200-day moving average. I have an orange line up here. This is my trailing stop level. You notice how I talked about the risk portion first because it's the most important. But to the upside, I have a trailing stop level. So if this stock gets up to this line, which is 1.5 ATRs above my entry. Then I would go into trailing stop mode. Basically, trailing stop mode means if I have a close below the previous day's low, I would get out of half of my position. So that's the setup on this particular trade. A nice higher low intraday rejection of the 200-day moving average, a V1 trigger, a rejection of the -1 ATR channel, and also an undercut of the low of the previous range here. That is why I took the trade. Doesn't mean it's going to be a positive trade, but if it does close below the 200-day moving average at the end of the day on Tuesday, because Monday is a holiday, I will get out, just take my loss. If it goes all the way down to my emergency stop, I'll take my maximum allowed loss. If it heads up to my trailing stop level, then I go into trailing stop mode. So I have a complete plan. If it goes up, if it goes down, I bought the correct amount of shares based upon my maximum allowed loss and the market volatility. So even on this trade right now, just bought this on Friday, and so we will see what happens. KMX was a trade that I took way back here on the 8th of February. And I took this trade, a little unorthodox trade, but the previous day we went above the previous day of that and then closed back below. That's a negative sign, but then rallied right back above. That was my entry signal. So I bought at 108.67. The next day moved up nicely. Now, another part of my trading is I always play offense and defense with my trading. When I talk about my end of day stop, I talk about my trailing or my emergency stop. Those are defensive moves, but I also use offensive moves. And what I mean by that is I always get out of a portion of my position on strength. So essentially, you can see I bought here at 108.67. Next day, we had a huge move up. I hit 3 profit targets, I believe. Each profit target I take 10% off. So the next day we had a huge day up. I took 30%, I believe, of my position off at profitable levels, which is nice because then we came back down. Then we had another little bit of a rally, a 2-day rally. I took some more profits off. Right, so I probably went to like 40. I took about 40% of my position off, and then we had the big move down because last week was volatile and on the way down. So in reality, this particular trade is down from entry to current price, down about 2.75%. But in reality, it's not down that much because I take profits when the market gives them to me. Not all of it, just a percentage of it. So I am a firm believer in playing offense and defense, and using this approach where I get out of a portion if it goes my way helps mitigate any losses to the downside if it moves down after it is moved up. So my end of day stop here is a close below the washout bar on the what day is that? Oh, on the 4th. So my end of day stop here is 105.20. It is currently 105.64. That's why I'm staying in the trade. Of course, trailing stop level up here, never quite got there, right? Never quite got to the orange line. So that's why I did not institute any trailing stop levels and then emergency stop down here. So just black and white on this particular trade, down 2.85% on this, and still holding because it's not closed below my end of day stop. Tesla's been a kind of a longer term trade here. It has worked out. It's been profitable. I did buy Tesla back here on the 28th of January. Nice confluence of signals. Bounce at the 250, intraday rejection of the 200, rejection of the -3rd ATR channel, and a V1. Bought here at 834.46. Had a huge move up. As always, every time it moves up, I take a portion off, which I did. And the very next day, it got to trailing stop level. That was that big of a move up. When I'm in trailing stop level, I wait for a close below the previous day's low to take off half, which I did here, thankfully, 907. And it's moved down. It's certainly lower than 907 now. It's 856.98. So again, took the trade because of the bounce of the 250, rejection of the 200, V1, rejection of the negative third ATR channel. As it moved up big, I took some profits off while I had them, got to trailing stop level, then had a close below the previous day's low, sold half of the remaining position in 907. My end of day stop here is going to be a close below the 200-day moving average, because that's what got me into the trade in the first place. Red line down here is my emergency stop. So anyway, right now, from entry to current price, up 2.51%, which I'm very grateful for, because it's hard. It was hard in this year to get really any profitable swing trades. So this one's good, up 2.51%. But in reality, up more on the trade, because I took profits off at a higher level, got out of half here with a close below the previous day's low. But remaining shares that I have, entry to exit, up 2.51%. And again, end of day stop, close below the 200-day moving average. TLT. All right, so here is TLT. I did buy TLT back here on the 10th of February. Why would I buy it here? It was really scary. Well, we had a under 30, over 30. That was my entry trigger. My end of day stop would have been a close below the 30 RSI. Of course, I always have my emergency stop down here. Orange line up here, trailing stop level. Have not quite got there, but had some big moves up, took some partial profits off as I described. And this particular trade right now, from entry to exit, up 1.46%, and I'm very grateful to have anything that's positive this week, because it's been difficult. So those were the trades on the daily time frame. I also trade weekly time frames. I took a trade on the Russell 2000. Following signals were under 30, over 30, intra-week rejection of the 100-day moving average, and a rejection of the negative third ATR channel. Emergency stop down here. Where's my end of day stop? Close below the 30 RSI. So bought at 119.23. Currently it's 199.46. This particular trade up 3.35%, pretty good. And we did reach trailing stop level here, 1.5 trailing stop level. So I am in trailing stop mode, but very grateful to have IWM still profitable. And then monthly trade. At the end of each month, I do take a trade if there is one. And I took this on Southwest Airlines. What were the entry signals? Entry signals were a V2. V2 consists of 3 bars, bar 1, 2, 3, 2 goes under 1, 3 closes above bar 1's close, and a rejection of the 100-week moving average. Bought this here at 44.74. It's 45.98. So far this trade was higher, but still up 2.72% on the trade. And then of course my end of day stop, this is a V2, so halfway the washout bar here is my end of day stop. Have my emergency stop down here. You can see my 3 lines here 48, 43, 52, 10, 55, 77. These are my intraday profit targets that I'm talking about, or in this case, intra-monthly profit targets. Have not got to any of those, but every time I get to one of these, I will take 10% of the position size off. So glad to have some of those trades profitable on the this week. Especially with the conditions of the market. Okay, now here are some other trades that I took this week. Didn't work out. But a lot of trades don't work out, and I'll explain why I took these trades. So I took SPY with a bounce off the 200-day moving average. It's a good back-tested approach to trading. The SPY is a rejection of the 200 or the 250. It bounced right here at the 250. I bought it at 438.52. Moved up nicely, moved up for enough for me to take profits, right, which helped mitigate ultimately the loss. But then last week we came back down. I had to get out of this on Friday because we closed below the 250. Remember, here's the emergency stop down here, and then my end of day stop was a close below the 250, and it did close below the 250, and so I did get out with a 0.94% loss. Not fun, but it's a small loss. That's the key. In trading, you have to have big wins, small wins, break-even trades. Even small losses are allowed in trading, but that's the math. You just can't have big losses in trading. That's going to mess up your profit and loss. So a 0.94% loss, not fun, but totally acceptable in the scheme of things. And so, I took this trade, could have rallied very strongly, but I don't know. You don't know. But as soon as it closes below my end of day stop, I got out for a very small loss of 0.94%. IBB, another trade that I took back here on the 4th of February, higher low V1, got in at 130 even, moved up nicely. Yep, you guessed it. As it moved up, I did take partial profits off while I had them, and then it came back down. I had to get out of the trade on the 14th, so on Valentine's Day, when it closed below halfway of the washout bar. And so this particular trade, I think I messed up these lines a little bit because it came from here. So this particular trade down approximately 1.88% on IBB because it closed below halfway the washout bar. XLRE. I did buy XLRE back here with the V1 and the close back above the 250-day moving average, which does back test well. I bought it at 45.29, had my emergency stop. Where's my end of day stop? That's right, a close below the 250, and on Thursday it closed below the 250. I had to get out of this trade for a loss of 0.89%, but again, small loss. And then Google, I did buy Google back here on the 14th with the close over the 200-day moving average. Gave me a very good risk to reward ratio. Initially went up, didn't even go up enough to give me any profit targets. And then on Thursday, we had a close below the 200, and I had to go ahead and get out for a 2.01% loss. So quite a few losses, but small losses, which is the way you have to trade, but grateful that I also have some current profitable positions as well. And actually here on TLT, I forgot to take a look here, but so TLT entry to exit, or maybe I did, I can't remember, up like 1.56%, but just very glad to have that. So, all right. So those are the current trades I have. Those are the trades of the week that I had. And right now, let us talk about a little trader psychology, shall we? There's some good channels on Twitter and Facebook that I follow. I really like. They always post good information about trading, good trading words of wisdom, and I always learn a lot from it. And when I find something that I like and I think would be helpful for you, I like to share it. This is from the Divergent Trader, at Divergent Trader on Twitter. It's a great channel. Really enjoy what he posts here, and I saw this today and it made a lot of sense, and I want to go over it. So the Divergent Trader says 10% is identifying a trade, 20% is managing the trade after you've entered, and 70% is managing yourself and your emotions. This may seem strange to you, but it is very, very true. 10% of your effort and what you're putting towards a trade is just identifying the trade. 20% is managing the trade after you enter. It seems like that would be 100%, right? How to identify it and then how to manage it, that would be 100%. But it's not. The 70% is managing yourself and your emotions. Trading can be very, very simple, everyone. It's our emotions that get in the way, and we see, oh, it has a nice profit, I kind of want to take it earlier. Oh, it has a loss, but it hasn't hit my stop loss, but I think it's going to go back down. But the Divergent Trader is completely right. About 10% of your effort should be in identifying the trade, 20% should be in managing the trade after you've entered, but the majority of your effort and your bandwidth in your brain should be in managing yourself and your emotions, and that's what trading psychology is. So the majority of any trade is just basically sitting tight, doing nothing, staying in the pocket, like I mentioned with the football analogy, but that's probably about 70% of your emotional capabilities is going to be just following the position. So put your time into identifying the trade, put your time into managing the trade, but it's not that hard. There's not that many things to do, but the majority of time that you have to focus on is managing yourself and managing your emotions. This is a completely true post here. It really is true. Work on sitting tight, staying in the pocket, and doing nothing when your trading plan tells you that there is nothing to do, and don't let your emotions get amplified and get you in a trade too early or out of a trade too early. But thank you, Divergent Trader. I appreciate that. You can follow Divergent Trader at Trader Divergent over on Twitter. Thank you for that. That was helpful for me. I hope it's helpful for everyone else. All right, I mentioned we were going to talk about a poem. This is from my good friend Frank. You can follow him at Franco D over on Twitter. He's a journalist. He is a musician, great trader, great guy, and he writes these poems, and I just love them. Let's see what Frank has to say today. Price is the creature that strikes from the deep. It turns a stock from an entity and gives it its teeth. Price is all a business, it plays for keep. Take it or leave it, smile or weep. Price speaks for itself, there is no mystique. And I like this poem, everyone, because price really does tell you the true story. If you listen to the news, you listen to the financial news, you read the newspapers, people have all these narratives about trading and what this is going to do and what that's going to do. But really, the truth of the matter is the price. Is the price doing what the narrative is? If people say Bitcoin's going to go to $100,000, great. I have no problem with that. I hope it does for all you Bitcoiners out there. But if it's below the 200-day moving average, and the 200-day moving average is $40,000, I want to wait till that gets above the 200-day moving average so that I have that support below. And if it can't get above there, then no matter what the narrative is, no matter what people are talking about, I really don't believe it. I need to see the price confirm what the narrative is. So don't believe in narratives. Don't just go off of, hey, this brokerage firm has a price target of this. Well, maybe, great. Maybe it's going to go to 100 if it's $80 right now. But that's why I'm a technical trader. I don't believe in the stories. I don't believe in narratives. I believe in the price. And this is exactly what Frank is saying here. Price speaks for itself. There is no mistake. So one more time. Price is the creature that strikes from the deep. It turns a stock from an entity and gives it its teeth. Price is all business. It plays for keeps. Take it or leave it. Smile or weep. Price speaks for itself. There is no mistake. So thank you very much, Frank. Do yourself a favor. Follow Franco D over on Twitter. Read his daily poems. I just really, really love them. All right, so we've gone through my current trades. We've gone through the trades that I closed out. And now let's do hopefully what's going to be helpful for me and other people out there. Let's go through the list today and see for next week some potential trades. Doesn't mean they're ready right now, but I'll tell you what I am looking for. Apple, the 5 is below the 20. A good back-tested, profitable approach to trading Apple is when you have the 5 EMA cross over the 20 EMA. That could happen next week. There's no doubt about it. I would, going lower, yeah, if we got down to the 200, I'd be very interested in buying at 200. I don't think that's likely. You never know what's going on with the politics and everything right now with the Russia situation. It could. If it got to the 200, I guarantee you I'd be buying it. But most likely for Apple, the most likely scenario here moving forward as far as a new trade next week would be if the 5 closes above the 20, that back test well. So I will mark Apple. Adobe is at a 2809, and it is also at the negative third ATR channel. 92% of prices tend to stop going down, move sideways, or go up when we get down to the negative third ATR channel. Well, we're there now. I'm not going to take a trade just based upon that, but I like big picture that we're at the negative third ATR channel. All I have to do is wait for a close above the 30 RSI. That would be my entry trigger. And a good company like Adobe being here at the negative third ATR channel and being very close to the 30 RSI, I like that as well. So I'm going to mark that one. AGQ, well, AGQ has done very well with the 520 crossover that happened back here on the 10th of February. Silver and gold, the metals have done well with all this instability. But for me to get interested in AGQ, what would I have to have happen? Well, a return to value, sideways motion, look for a V1 or a V2, maybe have a 5 cross under the 20 and cross back over. I don't see that as being super likely next week, so I'm not going to mark that one. AMD, okay, well, we already talked about AMD. I did buy AMD on Friday because of this nice V1, intraday rejection of the 200-day moving average. We already went over emergency stop, end of day stop, all that kind of stuff. I'm not going to mark this one, but if AMD did go under the 200 and then back over the 200, that would be interesting, but I'm not going to mark this one because I already have this right now. Amazon. Let me grab a little drink of water here. Well, Amazon, we're back in the value zone, which is great. I never like to buy above value. I like to buy in the value zone. We are in the value zone. 5 is 30.98.33. We're 30.96.07. If we had a 5 cross under the 20 and then back over, that would be definitely interesting to me. So I will mark Amazon. ARC, we're at 34.96 RSI. We are working on a double bottom with the bullish divergence. I will mark ARC if we went under 30, over 30 in conjunction with this double bottom and bullish divergence. I'd be interested in that. So we're 34.96. Doesn't mean I'm going to buy it now. I want to see it go under 30 and over 30. So I will mark that one. Boeing. Boeing's been pretty strong in the face of this market here. Don't really see anything on Boeing that interests me at this moment. Alibaba, don't really see anything on Alibaba also, other than the 5 is at 122.56, the 20 is at 122.96. So we did cross back under. So yes, if we had a 520 crossover next week, that would be a legitimate back-tested signal. I will keep that. Berkshire Hathaway, I don't really see anything here on Berkshire Hathaway. I like that it's come into the value zone. I like that it's holding the value zone right here, but I don't really see anything for next week. Bitcoin, well, we were talking about Bitcoin earlier. We did have this rally. We are back in the value zone. Let's see, 41,690, 41,705. So this is on the CME, if you're using CME quotes. So this did close under. Yep, it did close on the 520 cross under. If it closes back over, yeah. So on this particular chart, we'll mark that one. Budweiser, I don't really see anything likely here on Budweiser. Beyond Meat has earnings come up. I really don't see anything here. Caterpillar, nice big strong company like Caterpillar's 32.20. Next week, if we went under 30, over 30, that would be a legitimate signal. So we'll mark that one. CCJ, a close back over the 250 or a close back over the 200. That would be a good entry point. So we'll mark that one for next week. Carnival Cruise Line. If it got back over the 200, that would be legitimate. It's too far above here at the second ATR, so I'm going to pass on CCL. DoorDash, don't really see any levels that I think are likely for next week. DIA, well, we're at a 37.24. If we went under 30, over 30, I love to buy indexes with under 30, over 30 if it goes down. If it goes back up, if we get a close above the 250, that would be a good level to take a look at. Above the 200, that would be a good level to use for an end of day stop. So we'll mark DIA. Disney, don't really see anything on Disney likely here, so I'll just pass. DocuSign, 36.03 RSI, and under 30, over 30 would be decent, but I don't want to clutter everything up. I have a lot of other under 30, over 30, so I'll skip that one. Etsy, I like Etsy here, very close to making this double bottom while MACD is green. This has earnings though. No, I don't hold to earnings, so I'll skip that. Facebook, boy, Facebook has just been having a difficult time here. We're at a 24.07 RSI. That's so far down, I would be a little concerned about buying a close over 30, so I will skip that. FCX. The only really thing I really see on FCX would be a pull back to the 200-day moving average. You can see last time we were at the 200, the black line here, it did hold and bounce. It's a little far away from that, so I think I'm going to skip that. Fiverr. No. Gold's been, what a great signal from gold with the close under, close over the 200. My gosh, that one has just rallied on the political instability, what's going on with the Russia-Ukraine situation. We're to 68.86 RSI. If I had bought this, I'd be looking to exit this with rejection of the 70 RSI. So nothing there on gold. And again, I will go back over all the ones that I do mark here. GNRC, don't see anything likely there. Google. Yeah, Google for next week, I'm definitely interested in. If we intraday rejected the 250-day moving average, I would definitely be buying Google. If it went up, closed above the 200, I would also buy Google again, like I did over here. It turned out to be a losing trade, but anytime you can buy Google with a good risk to reward ratio off of the 200-day or the 250, I like it. So next week, a intraday rejection of the 250 or a close under the 250 over the 250 would be an excellent spot. Let me clean up this chart here. So yeah, definitely going to be marking Google. Goldman Sachs, 36.33. An under 30, over 30 on a large stock like Goldman Sachs, I would like. I mean, it certainly has the potential, so I will mark that one. Home Depot, I love right down here, but unfortunately we have earnings on the 22nd. But if earnings are bad and we go down and we bounce at the 250 and earnings are over, I would totally buy it. If we close above the 200-day moving average after earnings and it's a good risk to reward ratio, I would also buy it. You can see we've come down, down, down. We've kind of stayed in this range here. So there are buyers in this range. That can all change with a close, with earnings coming out. But let's go ahead and mark Home Depot as well. IBB, that's the one that I had and took the losing trade on. It's 35.54. There is a double bottom bullish divergence forming here. So yeah, I'm going to mark IBB again. Most likely the trigger on IBB would be if we go to the downside. It'd be great if we could double test this bottom here while the double, and we would have a double bottom with the bullish divergence. We need an entry trigger under 30 over 30, so I will mark IBB. INDA doesn't look likely for anything next week. Intel, well, this actually would have been a legitimate entry on Intel because it's 31.18. We did go under 30, over 30. We are at the negative third ATR channel. Again, 92% of prices fell there. So I will mark Intel, but again, we need an under 30, a new under 30, over 30 end of day stop being a 30 RSI. Russell 2000, I already have that on the weekly trade, so I'm going to skip that. J&J, well, I like J&J. Here we have a 200-day moving average. Here we have a 250-day moving average. If it were to close above the 250, I could use that 250 as my end-of-day stop. If it closed above the 200, I could also, so I will mark J&J for potential for next week. JO, which is coffee, we were above the value zone, came into the value zone. Really nothing to buy here, so I'll skip that. KMX, had that one, or I have this one as well, still holding my end of day stop of halfway of the washout bar. Nothing new on that one. Coca-Cola, boy, Coca-Cola has been very, very strong here, although what I see, we keep going higher and higher and higher. Here's a high, here's a high, here's a high. We have 3 higher highs here. No green MACD bars to be found here whatsoever. So there is a double top with the bearish divergence. I think Coca-Cola has been a flight to safety based upon what's going on here. If I looked at this, if I were to do anything with Coca-Cola, it would be to the short side, but not going to get into that right now. So really nothing here on Coca-Cola. Lockheed Martin, been very, very strong. I would be interested in Lockheed Martin if we came all the way down here. Look at this nice confluence of the 200 and the 250, but that doesn't seem likely for next week, so I'll skip it. Southwest Airlines, love. I already have this trade on the monthly. I don't really see anything here on the daily. Lyft, pulling back into the value zone. I don't see anything likely for next week. MasterCard, I would love to buy MasterCard with a bounce at the 200-day moving average. If we go down next week, we certainly could get that, so I will definitely mark MA, and we'll revisit that again at the end. Mickey D's, McDonald's, if we came back down to the 200-day moving average, that'd be a great risk to reward ratio on a company like McDonald's, so I'll mark that. Merck, this would have been a legitimate entry on Friday, an intraday rejection of the 250. I will mark this one. If we were to close under, close back over the 250 again, or if we close back over the 200, that would be a good entry point, so I mark that. Microsoft, would love to buy Microsoft here at the 250. It didn't intraday reject it on Friday, but last time it tested the 250 was all the way back here, and it had a nice bounce from there. It doesn't mean it's going to hold that again, but I like to look back in time and see whether or not a major moving average tested and it was respected in the past. And so Microsoft next week, absolutely for sure. If we were to go have an intraday rejection of the 250, or if we closed under back over the 250, I would certainly buy that. It does backtest well. Or alternatively, if we just have a close above the 200, that would also. So a lot of potentials here. I'm marking a lot of stocks for next week to look at. Netflix, we're to 36.72. I think I'll just skip that one. Nike, don't really see anything here on Nike. Nvidia, sure. A bounce of the 200 next week, or an intraday rejection of the 200 next week would be interesting. And keep in mind, I want to make this very clear. If Friday, if the majority of these stocks that I'm marking here as potentials, if they all triggered, I wouldn't get into all of them, right? I basically 90% of the time only get into one trade per day. I could have 5 great setups, but what I'm going to do, I'm not going to just take all 5 of them. I'm going to narrow the 5 down to the very best one, best risk to reward ratio, best confluence of signals. So, again, if we had all of these, all the ones that I'm marking trigger next week, it's not like I'm going to jump into all of them. That would be too many positions. That would be too much account heat. So I don't know which ones are going to trigger, which ones are not. That's why I'm marking them. But yeah, I'd love to buy a company like Nvidia off the 200. And you can see last time we were at the 200, we did bounce and it did respect. Doesn't mean it's going to happen this time. Not necessarily, but I think it's more likely than not. So I'll be looking at the 200 and also the 250 on Nvidia. Pfizer, well, we are at 32 RSI, so this would have been a legitimate entry signal because it did go under 30, over 30 during the day. I like this upward sloping 200-day moving average down here, so I'll mark Pfizer as well. Boy, we have a lot that we're marking. Perkin-Elmer, I think I'll just skip that. PLTR, double bottom, bullish divergence, under 30, over 30, so this was a legitimate trigger. I like the double bottom bullish divergence. If it went under 30 again, back over, that would be legit, so I will mark PLTR. Philip Morris, boy, what a run. This is a great example of sideways motion leading to a trend. And sideways motion eventually will lead to a trend. We just don't know if it's to the upside or to the downside or when it's going to happen, but it will happen. And then trends lead back to sideways motion. Way too high for me to get involved on Philip Morris, but congratulations to anyone that has Philip Morris because that has been super, super winner. PayPal just down in the dumps, $20.99, way too low for me to get interested in. The Qs, well, the Qs, NASDAQ 100, I certainly would be interested in an under 30, over 30, because we would also have a double bottom with the bullish divergence, so I will mark the Qs. Rio, don't see really anything there that interests me. Shopify, my gosh, the pain on Shopify, and sorry if anyone has this, it's 29.38. There is a double bottom and a bullish divergence happening here, which I do like. It's 29.38. It would have to close above 30 next week for a potential entry, so I will mark Shopify. SVB, I think I'm just going to skip that one. just so we don't have too many marked. SLV silver, the 520 crossover has done well. I'm going to skip silver. It's too extended. Snap had that big move up after earnings, pulling back. Don't see anything there. Virgin Galactic, which is SPCE, boy, moved up big, and then boom, gave it all the way back. I am not interested in anything there. SPY. So I went over the SPY trade that I had to get out of, but yes, I would definitely be interested in SPY next week if we had a close over the 250-day moving average. Here's the 250. Let me show you a back test of SPY on the 250 just to give you an example. I like to back test the stocks that I get in with rejection. So this one's basically saying if you have a rejection of the 250-day moving average, how does this back test? Back test pretty well. Buy and hold returned 379.3%. Using the rejection of the 250, still returned 323%. But the key is with these close stops in keying off the 200 or the 250, look at the drawdowns. Buy and hold, yeah, it made 379.3%, but it also had a 55.2% drawdown. That's a big drawdown. Using this approach, however, it made a little less, 323.60, but the drawdown was only 23.1%. That's the beauty and that's the advantages of staying in above these major moving averages and then quickly getting out if they fall below. So, here's the back test. It only wins 31% of the time, loses 69% of the time, but the wins are so much bigger than the losses, and that's what you need in Profitable Trader. You don't need a high winning percentage. You just need a good sorry. You just need to win a lot more than when you lose if you have a smaller winning percentage. And the win ratio is not good, but the winning factor compared to the losing factor is about 3 to 1. So that's what makes up for difference. So anyway, the long and short of this is that yes, if we can close above the 250 on the major index like the SPY, 100,000,000%, I would take that trade just like I did back here. It didn't work out, but it doesn't mean I wouldn't take it again. So close over the 250 or a test of the 30 RSI would be interesting for me. We're getting there, everyone. Teladoc, 3624 RSI has earnings coming. I'll just skip that. TER, don't really see anything here, but this sideways motion leads me to believe we will have some kind of trend, but it doesn't mean to the upside. It could also be to the downside, but we have a lot of consolidation moving sideways here, so I would expect this to move. I just don't know which way. TLT, of course, I did buy TLT with that under 30, over 30, went against me for a minute, but it held the 30 RSI. Now it's moving up. Grateful for that, but I don't see a new trade now. Tesla, I'm still long Tesla, but I will mark Tesla because if it rejected the 200-day moving average again, I would certainly buy it, just like it respected it last time. So we'll mark Tesla. Twitter's been an interesting kind of beast here. Don't really see anything on Twitter. Unity Software. Don't see anything that's very close on Unity Software. United Airlines closed back over the 200, but we're too far above, so I'm going to pass on United Airlines. I also have Southwest Airlines on the monthly, so I wouldn't want too much correlation. UNG, no. UNH, I'd be interested in buying it at the 200, but that doesn't seem likely for next week. Oil, we've had a huge move up on oil here. Don't see anything likely on oil. The dollar did come down, sideways motion here. Don't see anything on the dollar. Although we do have a MACD crossover. Looks like we have a 520. No, we don't have a 520 crossover, but yeah, I think I'm going to stay away from the dollar. The VIX, boy, VIX has been all over the place. I mean, we had such a huge rally up on the VIX and then a pullback and then up and then down and then up, and basically what the market's been, right? It's just been extremely volatile. So I don't see anything likely on the VIX. Verizon, Well, Verizon is kind of interesting here. We have this sideways motion. What did I say about sideways motion? Sideways motion leads to trends. Is this the start of the trend? I don't know. We've had a lot of under, over, under, over, under, over. So it's really kind of lost respect for the 200. So that reason alone, I'm probably going to just skip this, but I do like the sideways motion, and it seems like we're having a little bit of a breakout. We'd have to break out over this level yet, but it doesn't seem clear to me, so I'll just skip that. WBA, which is Walgreens, and under 30, over 30 would probably happen right down here with the confluence of the negative third ATR channel, so I will mark that. Walmart did really well on earnings, but I don't really see anything likely for next week. XLE, don't see anything likely on XLE. I remember taking this trade, not showing off here, but I just did want to point out that I did take this trade back here. Just this nice intraday rejection of the 200. If it would have closed below, I would have just gotten out. Right? For a small loss, I would have had my emergency stop, but look what this trade turned into. I remember I kind of got out of it right up about here. So that's the key to trading, everyone. Buying it at a strong support level like the 200, like the 250, like the 30 RSI. If you're wrong, getting out for a small loss. If you're right, kind of back to the trader psychology we were talking about, I wanted to sell this every day. It was just going up and up and up, and I didn't want to give the profit back. But that's where the 70% of your effort in trading is basically just sitting on your hands and doing nothing until there's something to do. But I don't see anything there. XLF, sure. If we have a bounce at the 200 next week, which is likely, I know the futures are down over the weekend, so I will mark XLF. XLRE is the trade that I already talked about. Took a small loss on that. Sure, if XLRE does close back above the 250, that would be one potential. If we go lower and go under 30, over 30, that would be the other. XLU, I think I'll skip. Healthcare, close back above the 250-day moving average. Well, let's back test this for real. So this is XLV. It's under the 250. If it closed back above the 250, would I want to buy it? Well, let's back test it. XLV. And by the way, I use ETF Replay as my back testing software, and I am using this by permission, but it's a great site, not very expensive. Just go to etfreplay.com, and then that way you can back test whatever. So I'm saying, okay, if it closed under the 250 and then closed back over the 250, does it back test well? Well, let's see. Well, it does. Technically, it backtests 22.9%, not very good compared to the buy and hold of 504. This is a very unusual situation where the maximum drawdown on this approach is less than or more than buy and hold. So with that being said, and looking at these results, and that's why it's important to look at these results, it hasn't done that well over the 250. So I'm not going to buy it over the 250, so I'm not going to mark that. Exxon, we were very high here. We've returned value, which happens very often, but I don't see anything here. And then Zoom Video. I'm a little leery here because earnings, again, I never hold through earnings, but we do have a double bottom and a bullish divergence. We actually have a double bottom bullish divergence and missing right shoulder, meaning we have a low here with deep red MACD bars. We rally into green. We are here. Clearly, we are lower here than we were over here, and there's no red bars at all. I studied one-on-one with Dr. Alexander Elder, and this is, his take on double bottoms bullish divergence is that they are the strongest technical indicator in trading, and I don't disagree. They just don't happen very often. But what concerns me is the earnings over here, but I could play it into earnings with the close under, close back over, but I'd have to get out. So before earnings. So let's go through again quickly the ones that I did mark. I want to reiterate, everyone, that if we have a good day in the market on Tuesday, all of these could trigger, but I'm not going to get into all of them. I like to stagger in one by one. I really, like I said, about 90% of the time, I only take one trade per day. So what are there, 30 symbols here? Well, if we have a good day on Tuesday, I'm not going to rush into 30, right? That would just be way too much account heat, and keep that in mind. So I'm pretty much only going to take one trade per day. So again, Apple, What are we looking for on Apple next week? For me, I'm looking for a 520 crossover. Now, it depends how big the bar is, whether I will take it or not. But if for you following at home, if we had a 520 crossover next week or in the future, if it wasn't too extended, I would buy Apple. Of course, if it came back down to 200, I'd be looking there. So that's Apple looking for a 520 crossover. Adobe, close back over the 30 RSI is what I would be looking for. I like that it's a negative third ATR channel. Amazon 520 crossover would be an interesting place to buy Amazon. Right now the 5's 309.98, the 20 is 309.618. Oh, my apologies. 30.98, 30.96. Oh, okay. So the 5 is still above the 20. So I better backtrack there. If it closes under and then closes back over, that would be my entry. But the 5 is still above the 20. I need the 5 to close below the 20. And then if it closes back above the 20, that's where I look for the exit on Amazon. ARC, it's 34.96 RSI. Next week, if it closes under 30 or intraday rejects the 30, that would be my entry signal. But again, a close under, close back over 30, or an intraday rejection of the 30. I like it because of the double bottom bullish divergence, so that's what I'll be watching for on ARC. Alibaba, looking for a 520 cross back over. Right now it's 122.58. The 20s is 122.96, so I'd need the 5 to cross back over. That would be an interesting place to buy Alibaba. Bitcoin, I am looking for a 520 crossover. Right now the 5 is under the 20. Caterpillar, big company like Caterpillar, and under 30, over 30 is where I would be interested. CCJ, close back over that 250-day moving average or the 250 is what I personally will be looking for. The Dow, if it goes down and under 30, over 30, this is DIA, and under 30, over 30, or conversely, if we could close back above the 250. Google found support at the 250, didn't bounce yet though, but I want to see an intraday rejection of the 250, or it close under, close back over the 250. So I like that level. You can see last time it did very well at that level. Goldman Sachs, it's at 36.33 RSI. So if I could get an under 30, over 30, and that double bottom with the divergence, it would be excellent. It's not there yet. It has to come down. Home Depot has earnings coming up, but after earnings, if I could get a rejection of the 250 with a good risk to reward ratio, that's where I'd be looking. Or after earnings, we have a close over the 200. That's what I would use as my end of day stop. IBB 35.54 RSI. I needed to have an intraday rejection of the 30 RSI or a close under, close back over. Be good because we'd have a double bottom with the bullish divergence. Intel 31.18 RSI. If we have an intraday rejection of the 30 RSI next week and a close back over or close under, close back over, that's what I would be looking for on Intel. Johnson & Johnson, if we could close above the 250 next week, that's what interests me. MasterCard, if we could come back down a little further, we have the golden cross here with the 50 crossing over the 200. So a bounce off the 200, I'd be very interested in a company like MasterCard next week. McDonald's, if we moved all the way down to the 200 bounce, that would be interesting. Merck, if we could make it over the 200-day moving average, or we could have another intraday rejection to the 250, that's what I'd be looking for. Microsoft, really would like to buy Microsoft with an intraday rejection or a close under, close over the 250. I'll be watching Microsoft very closely next week. NVIDIA, intraday rejection to the 250 or 200 next week would be excellent, or if it heads lower, intraday rejection or close under, close over the 250 would be excellent, especially on a big company like NVIDIA. Pfizer, if we could come back down, test that 200, that's what interests me next week. PLTR next week, and under 30, over 30, that's what I'd be looking for. The Qs, 37.72. If we could go under 30, back over 30, that is what I would be looking for. I'd be watching that one very close. Shopify's 29.38 RSI and the negative 30 ATR channel. If I could get a nice gentle close above the 30 RSI, that would give me a good risk to reward ratio next week. SPY, if it goes down further, under 30, over 30, great, especially on a major index like SPY, or alternatively, a close over the 250. Tesla, I'm already in, but next week, if it rejected the 200, I would probably add to this position. If it closed under the 200, I'd have to get out. But then after that, if it closed back over, I would get back in. Or I would also definitely take this with a rejection of the 250. You can see last time back here on the 28th, it bounced right there. That's where the buyers came in. Doesn't mean they're going to be here next time, but it's more likely than not. WBA, 3404 RSI. Look for an under 30, over 30. XLF, financial, if we could bounce at the 200 or at the 250, that's where I would be interested next week. Real estate, close above the 250. If it goes up, would be interesting. Or if it goes down and under 30, over 30. So this just needs to go down further or up further for me to get interested. And then lastly, Zoom video, if we went under 30, over 30, in context of this double bottom and bullish divergence, I would be very interested there. But even if that happens, like on Tuesday, I am definitely going to get out before earnings. So anyway, those are the flagged symbols that I'm looking at. Hopefully that helps you. Did want to remind everybody that I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I'm good at it. I've been trading for over 25 years now. I've taught people from all over the world. I teach a course. It's a great course. It's 15 hours long. I teach you all 5 of the different trading approaches that I use. I teach you step by step how to trade them. Like I said, I've worked with so many traders around the world, taught them these approaches, watched them bloom and blossom as traders, and it's a great course. Like I said, it's 15 hours. Each session is 3 hours, and then there's 5 sessions. That's where you get the 15 total hours. And I work very hard in the lessons to teach you exactly how to trade this. It does cost $1,750. It's a bit of an investment, but I promise you, you will be a better trader after taking this course. And I think the best way to learn anything is one-on-one with your teacher or your mentor. I throw a lot of curveballs at you. I put a lot of attention and energy into how well you're doing in the course. And if I feel like you're not, we keep at it. We keep at it. It's very important to me that my students succeed. And in addition to teaching you everything, we do all sorts of simulation trades where I put you in the driver's seat. You're driving. You're telling me, are we in? How many did we buy? Are we out? Are we out of partial profits? Do we get to trailing stop levels? Are we at significant overhead resistance levels? Did your emergency stop get hit? But essentially, when you get done with this course, you're just going to be a better trader, and I think you have a greater understanding of how to trade. So if you are interested in doing the one-on-one course with me, and I know it's going to help you, but if you are interested, reach out to me. My email is in the description of this YouTube video. Just send me a quick email. Say, Greg, I'm potentially interested in taking your one-on-one course. I'll reply back and say, hey, that's great. Thanks for saying hi. Let's set up a Skype call. The Skype call is free. I promise you it's not a sales call. I have so many students. I'm not trying to sell you anything, but what's important to me is that I do speak with potential traders, learn more about their trading challenges, their trading goals. And then it's a great time for the potential student to ask me specific questions about the course. And when we're done, I promise you, I won't bother you. You can think about it as long as you want. But if one day you wake up and you're like, hey, today is the day, I want to start the lessons with Greg. I really want to learn this skill. Just email me back. We'll get it scheduled and away we'll go. And you'll be happy that you did. I promise you. Secondly, I have a great online course available at udemy.com. The link to that course is in the description of this YouTube video. And in that course, I teach you the deep dip buy stock trading strategy, step by step. It's a great course, 9.5 hours of video, 26 videos total, 15 study guides. I have got so many good reviews and feedback from all over the world on this course. It has so much content, and it teaches you step by step how to trade the deep dip buy approach. And the best news is that it only costs anywhere between $12 and $15 on Udemy. It is the best deal of a lifetime. The link to that Udemy course is in the link in the description. Do yourself a favor and watch that course. And then lastly, if you like today's podcast, if you like this weekend kind of wrap up, please do me a favor and hit the thumbs up button. It helps to build the channel. It helps to keep the channel around. It lets YouTube know that there's some valuable content here. And so if there's anything valuable that you learned today, if you could please just hit the thumbs up button before you go, I would appreciate it. So that is about it for today. I hope you have a nice, long, extended weekend. I hope you're staying safe in the market. Please be careful. Stick to your rules, stick to your process, position size correctly. Don't let your ego get involved. If you're wrong, just get out. There'll be other trades. I promise you, the bus comes around every hour, right? You're always going to have trades. And, for those of you who've not been doing well lately, because swing trading has been hard lately, don't be discouraged. At some point, you never think the market's going to go back up, and it will. And some point, the market goes up, you never think it will go back down, and it will. So the key is keep your losses small, be patient, wait for correct signals, then follow your process. And if you're in a drawdown, it's fine. It can turn around. Just don't make it worse. Don't revenge trade. So have a great rest of your weekend, everybody. If you could hit the thumbs up button, I would appreciate it, but be good, be safe, drive safe. Please try to go out and do something nice for someone today. It would make the world a better place. If you could, in addition to that, go out and try to do something nice for an animal. I would appreciate that. The animal would appreciate that. So I think it's a good policy. Do one nice thing for another human being each day. To try to do one nice thing for an animal each day. It's just good karma, and I think it will come back and bless you one day as well. So thanks again. Really appreciate you tuning in. Hope it's helpful, and we'll see you next weekend. And on the way out here, I have to run the U.S. legal disclaimer again. All right, so take care, and thanks for watching. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors, such as lack of liquidity. Thank you.